If I would kind of start things over again, there are multiple things I would do different. Hindsight's always 20/20, but partnerships is really a way to get to where you want to go, whether that's doing your first deal or you want to do a 200-unit apartment complex.
Sure.
It makes things a lot easier when you bring in people that are better at certain things than what you are.
Hey, welcome back.
Yeah, thank you. My name is Mark, and I'll be your host tonight. I'm here with my...
and that's the end.
I wouldn't call him friend, acquaintance, I don't know. What's your name?
Adam.
Adam, it's about time you leave, okay?
Some people called me Australian Adam. You know, I was over there, and one time I went to Australia and I caught a jellyfish right there, right on my top of the head, right there.
Is that true?
The little danglers, the little tentacles, they dangle right on my head, right there. I just picked up that jellyfish and threw him right there in the water. It's crazy.
Is that true?
Yeah.
No, it's not.
That could be.
No. Oh, now you're messing our setup up, bud.
Oh, what happened?
We're supposed to be professionals.
I'm not even sure what broke off.
We're supposed to be professionals. We started this off with you with a fake accent. You've never been to Australia. You made up a story, and now you're breaking our shit. Is this how we start podcast?
But you ever been to Canada?
Nope. By the way, this is episode 201, and shout out to our sponsors, Built Shirts. I should say future sponsors.
Yeah.
Future sponsors, Built Shirts, and Costco. Costco pants, Built Shirts.
Built pants for me.
Where's that shirt from?
It's Built.
Built, yeah.
Yeah. Mainly because, we're built individuals.
So, yeah, thank you, Built, future sponsor.
Yeah, shout out.
Yeah, just call us, email us back. We're ready. Okay,
Anytime.
So this episode...
We got a good one today.
Yeah, we are going to chat about passive versus active investors.
That we are. Here we are.
So how about you start off and let us know on a high level view, what's a passive investor and an active investor?
So definition between the two.
Britannica, Encyclopedia Britannica?
Yeah. I don't know. I don't know if I have. I'm more on the Wikipedia side myself.
Okay, quick question.
Yeah.
Were you around when encyclopedias were the thing and you didn't have the interwebs?
And when you say the thing, like, probably didn't get out much, huh? Like, yeah.
I'm from small town Nebraska, so
I know.
Yeah, so no.
Last time we talked about how you went to a beach that someone had brought some sand in. I think it was a few sandbags, and you used to rake it yourself.
Yes. And people would pay me money.
Yeah, exactly.
Great business model.
Hey, it sounds wonderful.
So, serious question.
Yeah.
Did you have encyclopedias when you grew up?
We did have some encyclopedias. We had dictionaries.
Dictionaries, yeah.
Yeah.
The good old days.
Yeah, I mean, I grew up without the internet.
Yeah.
Yeah. It was nice, fun.
Yeah.
Yeah.
Well, yeah.
It was great.
Let's
great way to grow up. Now that I'm
rid
older.
of the internet.
Yeah.
You want to?
I'd rather not. Thank you.
My mom one time, true story. You can ask my brother. She shut off the internet. She shut it off.
Yeah.
100%. So yeah, her something was not going right with her computer, and the entire family was back at her house during the holidays, during Christmas. Both my brothers, and this was recently. So we're all back there, holidays, and she just yelled out loud from the family room where she was on her computer that she was shutting down the internet. And we're like, no, don't shut it down. And she did it. She shut it down.
This was recent?
Recent, yeah.
Wow.
So I don't know if you were affected by it or if she just meant that she was shutting her internet off or the route off, but I didn't know if it was like a worldwide thing. So
was this 3 Christmases ago? I remember something along those lines. Yeah, I got a notification.
Did you?
Yeah, Post-it note, I think it was.
She maybe mailed something out.
Yeah.
She's pretty proactive.
It was a little bit of a snail mail situation. I think the internet actually shut off before I got the notice. But
yeah.
Here we are now.
Okay, so back to the original question.
Yeah, here we are. Okay.
Passive versus active.
Passive versus active.
What is it?
So passive, you are an investor, would be somebody like, working with Cherry Pick Capital like us, or other people that are actively managing, finding, and, closing on these deals, producing a return for investors. Active, on the other hand, is more, as you can imagine, more active, right? You are finding deals, you're managing properties, you're managing property managers. So, you're kind of going through that whole process, and your boots on the ground. You're dealing with the day in, day out shit, in the end that, pros and cons on both sides for sure. But just acknowledging that, you're kind of in the trenches with it, which, is something that we personally love and enjoy and all of those things. But it also is an acknowledgement of, what you're spending your time and energy and focus toward.
Yeah.
So, definitely kind of pros and cons on both sides. I guess we'll kind of dive into both paths for real estate investors out there. But, from your side, what are some of the pros that you see on the active side?
So yeah, we chatted a little bit about this. You guys might be surprised, even though it's a super professional setup, professional quality. We're new to podcasts, so we talk about what are we going to talk about on the podcast. So offline, when we're chatting about pros and cons, you get the aspect of both. You've been a passive investor, you've been an active investor.
Yeah.
For me, I've always been on the active side. I do see from the passive side now that we're raising money for our fund to pursue deals, but my whole perspective has always been active. So to me, on the active side, it can be a lot of work, but it can also be really rewarding for that work. There is a lot of upside to where you're directly in control of the deal. When you're active, it's your deal. You can make the decisions on what you want to do for whatever you're doing with that deal, whether it's a fix and flip or holding on to as a rental property or whatnot. A lot of our experiences talk will be kind of based around rentals because that's where we're at now. So with the rentals, as an active investor, you get to really dictate, okay, what am I going to do for rehab on this property? Does it make sense to rehab compared to the increased rents I can get, or does it make sense to just keep it the way it is, make it nice and clean and livable, but maybe not updated and get a bit of lower rent? So there's definitely some stuff that goes into what you do when you acquire a rental property and the numbers, but that's all up to you as an active investor. There's really no outside influence per se on it. So with a lot of that decision making and whatnot, like I mentioned, you get the upside. You get all the upside. You get all the equity, all the cash flow, which kind of leads me to also a con of it, which is your next question, right?
Well, I was going to kind of elaborate on that point as well, though, that you're an active investor, you're spending that time and energy toward it. And then you have, kind of your decision if you want, hey, I want to go sell this property now rather than later. Hey, I want to go buy something else or buy a primary house or just want cash to go on a trip to Mexico, whatever you want to do. It's your choice, which is, I think one of those big benefits on active side. Yeah,
that's a great point too, because at the end of the day, that's what it boils down to. Is you acquire the asset, you fix it up, and again, we're talking about rentals. Fix it up, you rent it out, and then is it something that you want to sell right away within a few years and take advantage of the sweat equity that you put in and appreciation and whatnot?
Yeah.
Or is it something you want to hold on to long term and let the tenants pay down the debt? So when you're solo, you're active on your own, you're in control of that. But even having a partner in on it can definitely change that dynamic on making sure you guys are on the same page about what you want to do long-term wise. Getting into a deal together, you got to be thinking 2, 3, 4, 5 years, 10 years plus down the road on what you really want to do before you jump in on a partnership with somebody. So
yeah, it's a mini marriage,
Yeah, for sure.
Really, right?
Without the intimacy.
Yeah.
Right.
Oof.
Yeah, and then again, what I was going to segue into the cons. There's definitely some cons to it, and me personally, when I was in the beginning, it's like this is all in my control, which I just said was a benefit, but at the same time, it's like you start to kind of question yourself: is this the best thing to do this amount of rehab? Should I rent it out at this price, or should I hold out and try to get a higher price out of the rental?
Yeah.
Should I refinance? Should I sell? It's like it's nice. It's nice to have that control, but at the same time, it's also nice to have others' input and or have that decision. I don't want to say be made on your behalf, but you're not so much in control of it, and you can have other people to give you their 2 cents on what's best.
Yeah, absolutely. Because the pros and cons kind of play off each other a little bit, right? So in the end, if we were to look at kind of, pros, cons on the passive side, on the con side, let's say you're subjected to what the others want to do, for like, investing in Cherry Pick, for instance, it's what the general partners think is what's best for the fund, but also an investor takes it upon themselves to say, hey, you guys are experts in the field and, we trust in what you're doing. Again, I guess it comes down to, on the passive side, con is that you don't have the flexibility of saying, look, I really, want to sell now or want to, move that money somewhere else. So there's kind of, more of a team environment rather than an individual. Pros on the passive side, though, for one, you're investing with experts, making sure, absolutely, whether that's, of course, us or someone else or whatever, you want to do your due diligence and you hope you're investing with the experts, right? People like us that know what they're doing and are in the trenches, have seen, the successes, the failures, and what has worked and what hasn't.
Been through the ups and downs.
Yeah. And then you think about even scalability, right? Like, so absolutely, if I'm going to go invest by myself, maybe I go buy 1 or 2 properties, and then I'm also subjected to those 1 or 2. I don't have diversification, and now all of a sudden both of my tenants just left and I don't have income coming in.
Yeah.
So I think that's, a big piece of this is that I think a lot of people, including myself, as I had jumped in initially, is like, oh, I'm gonna crush this and it's gonna be swimmingly, and then it's like, oh, I had this big, my water heater went out and then a tree fell in my front yard that cost me $3,000 to remove a massive tree that ripped up my driveway, and that's my fault. It's like
that did happen at your place, didn't it?
That was mine.
One of the places I think I sold you, one of your first turnkey rentals, right?
Yeah. And then you think about that if it was, a bigger deal, something that has more properties, more doors, things like that. You get the diversity that if one property went down, you have all of these other doors to subsidize that.
And that was something we were going to talk about in a different episode, was actual cash flow from properties. We won't dive too much into it now, but what you just mentioned was, if you have 1 or 2 properties and the driveway happens or you have to replace a furnace, wipes out an entire year's cash flow. And then, if you have something else that happens to happen that same year, now you're starting to come out of pocket, versus what you just mentioned about being a passive investor and investing in a fund per se, where you have multiple assets to help offset some things that may happen at a certain property. Yeah,
absolutely. And then just the scale becomes bigger. You go buy 1 property, it goes up. Let's say you buy it in Omaha, it might be $100K for a property or whatever. It goes up 10%, you made $10K.
Yeah.
You go buy in a fund, let's say we go buy a $10 million property and it goes up 10%. You just made $1 million.
Yeah.
So the impact is substantial as you continue to scale. So again, it really goes back to goals, expectations, what you really want, what's your vision in the end. Do you want to be in the trenches and learning and go through that whole process because you want real estate to be a core of what you want to do with your time? It comes down to opportunity cost.
Absolutely.
Am I going to spend my time fixing things and receiving calls from property managers that aren't doing their job and things like that? Which is great. It's something that obviously we've jumped into and are excited about. And if anybody else is excited about that, that's awesome. But if that's not what you want to do, you want to be more invested in real estate, be connected, learn the process still. However, you're not the one getting these phone calls and, hey, there's a water leak or whatever the case may be, right?
Absolutely, yeah.
So to me, again, pros and cons, what's your path? What's your excitement? But
I think you brought up a good point, the scalability of it. That's one thing that really gave me momentum after a while. Was I was doing a bunch of fix and flips with a money partner. I've mentioned it previously, but with a money partner, and then I started kind of doing them on my own with my own money. But then you're limited to your own cash, your own skills, resources, things like that.
Yep.
And once I started to realize, hey, if I'm going to scale up, I need help. I need to bring in people. That's when I really realized having partners, the right contacts, the right network, bringing people in to help you that are better than you, that are better at certain things than what you are, and hiring the right people. That's really what gets you further if you want to scale up your business and make it more fruitful and whatnot. It's partnerships are huge.
Yeah, 100%. And it comes in all forms or fashions. Those partnerships could be as, minute as somebody just, threw in some cash and say, hey, I want to return, and that's, all I want. There's other people that really want to be involved and interested and throughout that process, or, hey, I can add this piece to the overall puzzle.
So it's kind of a good segue. How did our partnership form? What did we start to do together?
Yeah, so we jumped in through, got connected through that mutual friend, bought my first property through you. And then to me, it was really just finding somebody knowledgeable in the space, knew what they were doing. I had some cash that I had made through my day job.
Yeah.
And was looking to invest in real estate, wanted to get more active, more knowledgeable, wanted to jump into something scalable, that went into apartments. And, really I had baseline knowledge of hey, there's a single family house, a property manager, a turnkey, but I wasn't, in the trenches yet. I wasn't, kind of digging in deep. And so finding that next piece, I had cash, but I didn't have a ton of the real estate knowledge that, fortunately I was able to, find in you, and you were able to help mentor me throughout the process of real estate and negotiating some incredible deals that we've done throughout, our career together.
Yeah.
That really just comes through knowledge and understanding. And if I had taken that cash myself and gone invested, I would not be where I am today with you. We've been able to grow as a partnership, as a team, much more aggressively because, we jumped in together. It was not just kind of an active investment by myself, or even really just a passive investment with you. It was, hey, let's jump in together and partner and go forward.
Yeah. I would say a big part of how we've complemented each other, or not each other, what you've brought to the table for me was, one, you had money, access to money, and one thing for me, I always get amped with people in your position that have full-time jobs that want to get into real estate, and it's provided me, my wife, family, a lot of stuff, a lot of freedom, freedom of time.
Yeah.
Money's always great, but to me, it's more about freedom, about time.
Yeah.
But one thing you
trade time for money, right? In the end.
Absolutely. Yeah. And life's short, dude. And people don't realize that at all.
Yeah.
And then one thing you brought too was you pushed me outside of my comfort zone for sure. And you did it, you didn't even know you were doing it at the time, but it was when we purchased a 14 unit, a 12 unit, another 12 unit, and then there was this 24 unit, and this is all within 18 months, 12 months.
No, 1 year. This was less than 1 year. We did from May to December. Yeah, almost 7 months.
Yeah, and you saw this other 24 unit. I was like, dude, no, because I was, part of what I bring is also management, systems, processes, things like that.
Yeah.
So we acquired the other apartments, and we were managing those. They were heavy lifts. We had to start doing a lot of unexpected rehab to those guys for sure.
Yeah.
another story for another time.
Yeah, 100%, man.
And then this 24 unit one came on, and you saw it, and you're like, hey, let's do it. And I was like, dude, bro, no, we just got all this stuff. Like, a lot of people may think the process, there's a lot that goes into deals, finding deals, closing deals, and people think, hey, deal's closed, we're good. That's when really,
nice.
That's when stuff starts. Yeah,
Yeah.
That's when it really starts.
Yeah.
So at that time, we were deep into these other deals, and you're like, let's do it. And I was like, nah, we're good. But you just kept pushing, and it forced me in particular to grow and think bigger. It's like, okay, now I was self-managing quite a few single families, and self-managing was fairly recent. I started self-managing by the time we started buying those apartments, probably only like a year.
Okay.
And prior to that, I always had third-party management. So self-managing was a big deal to bring on a good chunk of properties that I had at that time. And by us buying that additional apartment complex, it really made me get outside my comfort zone and be like, okay, now here's what we need to do to scale up to the next level. Because that really, even though it's not that big as 24 units, so we bought a 12, and a 14. So that 24 units was a good sized property compared to the other multifamily we have. So it really forced me to grow and figure shit out. And like, okay, how do we take on this 24 units, but also how do we, if we wanted to, take on a 48 unit or 100 unit, 200 unit, whatever that looks like.
Yeah.
So for us to get that next step, I not only need to scale up to be able to bring in an additional 24, but really, now that I'm going through this process, I really need to figure it out to where we can bring on 48 units, 100 units, and not have it be such a bottleneck or growth issue and whatnot. So
yeah,
that was a big thing. Just what we talked about before, just going out and doing stuff, doing it.
And it makes you grow. It's always challenging, a little scary.
Yeah.
Sometimes very scary.
So
Depending, what you're jumping into. But, in the end, you put your head down, you work, and you get the right people around you, and things work themselves out, right?
You learn.
Yeah.
That's what it's all about, just learning.
Yeah. So for you, what was takeaway from today? Biggest takeaway?
I would say partnerships. If I would kind of start things over again, there are multiple things I would do different. Hindsight's always 20/20, but partnerships is really a way to get to where you want to go, whether that's doing your first deal or you want to do a 200 unit apartment complex.
Sure.
It makes things a lot easier when you bring in people that are better at certain things than what you are.
Yeah.
Because everybody has their own certain skill set, and it's really realizing what you're good at compared to what you could bring in help on.
Yeah, I like that.
Cool. We did it, bud. Number 2 in the books.